We're going to take a look now at employee wage increase adjustments that have appeared in past exams. So it might say to you, provide for a wage increase of whatever percent to be backdated to cover the certain amount of months from a particular date. Or it could just tell you the particular date and you have to count the months. So when we see the words provide for or provision should be made for, we need to think of the balance sheet. So this wage increase has not been provided for or paid to the employees yet. So wage increase is added to salaries and general expenses in the administration expenses in the trading profit and loss account, or it would go into direct factory wages in the manufacturing account if you were doing a manufacturing account. The wage increase due then at the end of the year will appear in creditors' amounts falling due within 1 year in the balance sheet. And it doesn't matter what type of account you're preparing, a sole trader, a company or a manufacturing account, the wage increase due is going to go there. Now, so imagine a sole trader business here wanted to pay a wage increase of $5,000 to their employees. You would just add $5,000 to the wages figure from the trial balance or the salaries and general expenses or whatever figure it might be. You'll add the $5,000 there, and then in the creditors you will add $5,000 wage increase due to your creditors. The same would be treated in a company account. In a manufacturing account, it's going to be a little bit different. Your direct factory wages are in the manufacturing account, so you add the $5,000 there to the trial balance figure. And then you put the wage increase due into the balance sheet under creditors' amounts falling due within 1 year. Right, so let's get started and take a look at some wage increase adjustments that have appeared in the past. So looking at the 2018 question, okay, you have direct factory wages there, 200,000, and part 5 says provide for a recent wage increase of 5% to be backdated to cover the 3 months from the 1st to the 10th, 2017. Now, just noted here that this actually will have an impact on the rebuilding of a store and then the depreciation of buildings then when you're asked to calculate that, right? So it's very important that you kind of link them up as you're going along, but we'll look at that in the buildings adjustment video. So to the direct factory wages, so the direct factory wages were 200,000 in the trial balance, and then we add the wage increase of 5% to be backdated to cover 3 months. So 200,000 by 5% by 3 over 12 is 2,500. So you just add the 2,500 there. And then in creditors minus 1 year, you have wages due 2,500. And that's that. In the 2016 question, and it would be the same about the extension to the warehouse, and if you had to do depreciation on buildings, you'd have to take this into account. So note 8, prepare for a recent wage increase of 5%, which has been backdated to cover the 6 months from the 1st of the 7th, 2015. So the direct factory wages up here, 220,000. So in the manufacturing account, you're going to add 5,500. How did we get that? Well, it was 220,000 multiplied by 5%, multiplied by 6 over 12, and that's your 5,500. And then you have the wages due in the creditors' amounts falling due within 1 year in the balance sheet, 5,500 there. And that is the employee wage increase. So just remember, if it was a company account or a sole trader account, you would add it to wherever the wages and salaries is, which would be the admin expense in the trading profit and loss. But if it's still due at the end of the year, it will have to go into creditors minus 1 year.